The Road to Autonomy is presented by the Road to Autonomy Index. The Road to Autonomy Index is a rules-based equity benchmark index that measures the performance of a basket of global companies that are involved in the development and commercialization of autonomy. Institutional investors and fund managers are watching megatrends that are shaping investment opportunities today. These megatrends are creating thematic investment ideas and opportunities for forward-thinking investors. We believe that one of the biggest megatrends today is autonomy. That's why we created the Road to Autonomy Index, the world's first and only pure-play index to track the thematic investment opportunity in autonomy. Follow the Road to Autonomy Index on your favorite finance app by simply typing in the ticker Autonomy. To learn more about the Road to Autonomy Index, visit roadtoautonomy.com/index. Hello and welcome to the Road to Autonomy. I'm your host, Grayson Brulte. On today's episode, we're absolutely honored to welcome back Chuck Price, President AI Kinetics. Chuck, welcome back.
Thanks for having me, Grayson.
It's great to have you here. You have deep knowledge of trucking, autonomous trucking, and the current state of the industry, because you and I both know, as Bob Dylan once sang, changes are coming, and change is coming to the autonomous trucking industry. Chuck, in your opinion, with your long background in autonomous trucking, what is the current state of the autonomous trucking industry?
Well, you're right. We are going through change. What we're seeing is the early phase of this development, which was largely science, doing science, now moving to doing engineering and commercialization. Some of the companies that have been involved in this thought ahead for that and are prepared, and others are struggling or have struggled. So what we're seeing is a consolidation and some changes in strategy that I think are normal and healthy for an industry as complex as this, I should say. The technology is new and highly disruptive, and one should not expect that this would just quickly come into place and be at scale. It's hard work. And I think the companies that have been involved have made great strides. There's a lot of work left, but it is in a phase where things are changing.
Things are changing, but you said it, the market's healthy. Consolidation is healthy because now instead of spreading resources, they're going to go to a few players. And on Wednesday, July 26th, we had the big news. It was rumored for almost a year. Waymo publicly, and I repeat publicly, announced that they were shutting down their Waymo Via division, their autonomous trucking division. What are your thoughts on this shutdown, and what does this signal to the market?
Well, this is a complex question. And I should say right up front, I have a bunch of friends at Waymo, and I wish them all the best as they go through this transition. I know some of them are worried, but I think in this case, I think Waymo did the right thing for a lot of reasons. I think the choices they made were choices that were unique to Waymo. Waymo had a long history of pursuing cars. It has been my contention for years. I've publicly stated that I felt autonomy companies should focus on one market and make that their goal. I am a firm disbeliever in the notion of a universal virtual driver, and I think we're going to talk about that some later. But in the case of Waymo, they started with cars. They invested billions in moving cars forward, and they attempted to leverage the same technology with their trucks. Trucks are very different from cars in many ways, and it affects every layer in the autonomy stack. So the attempt to make this a technology that spans multiple vehicle types and multiple markets, I thought was, even for Waymo, too far. And so I think this correction that they've made is the right one for them. Now, I say for them because I believe that trucking is the right first market, not cars, for a lot of reasons. But Waymo has a tremendous amount of inertia in cars. And so if anyone can succeed with cars, it'll be Waymo. There are others that are also making great strides, but Waymo has the resources, and I think they're making the right call to dedicate in cars. Any other company, I would say go trucks. Forget cars. Cars are too hard for most startups or most technology companies. Waymo is unique in that regard that they can weather the great expense. They can talk in terms of 10 years, 15 years. most companies can't.
Waymo, in my opinion, has always been an autonomous vehicle. I underline in bold vehicle company, not an autonomous trucking company. I agree with you that it was the right move for Waymo, so they were always been, in my opinion, an autonomous vehicle company. And then come September 1st, they're getting a new de facto CEO in Ruth Porter. She becomes president and chief investment officer. While technically she's not CEO of Waymo, she is going to oversee the spending of other bets, which the Waymo funding comes from. And Ms. Port, along with the Alphabet team, they're getting pressure from TCI Fund Management to cut costs, increase the buyback. And Ms. Port's listening to Wall Street, and she's doing a really good job of financially managing Alphabet. And we saw that on their Q2 2023 earnings call. I think it's a very positive move for Waymo, what they're doing. And now I'm going to put on my Wall Street. We're going to play a fun little guessing game here because that's fun to speculate and guess. Waymo is clearly focusing their car program. They've removed all mentions of Via on their site. It's been reported by TechCrunch that a majority of their employees on the trucking team are moving over to the passenger side to work on highway speed driving. Does Ms. Port look to make a strategic move by trying to sell perhaps some of the Waymo IP and patents related to trucking and or licensing them to, say, a Pat car, for example, to generate a revenue stream so you can go to Wall Street? Well, we might have invested X billions of dollars in trucking. We're now recouping it, and here's a 10-year outline of what we expect from this IP. Perhaps something like that could happen. What do you think?
So here's how I think IP monetization works. Certainly, if you are exiting the business, you would look at selling your patents along with other tech. But if you plan to stay in the business, what you're going to be looking at is licensing. Now, many companies, IBM being a great example, made it a major business to visit on the rest of the computer industry with their patent portfolio in hand and demand money. It was a great strategy. They made a ton of money on it. The issue is that you need to do that when the market has developed. For companies that have not yet released product, they don't have revenue. So there's not a lot you can extract from them from an IP licensing standpoint that would really be of long-term benefit. So what I believe that Waymo will do, now they might decide to sell some of their truck patents, but they've integrated their car and truck side so much. I actually don't know what is unique to trucks in their portfolio. They may be so integrated that selling a patent does not make a lot of sense because it might just tie their hands otherwise. I do believe they're likely to sit tight on their patents, continue to develop the portfolio, and the moment one of their competitors goes commercial and starts generating revenue, they will, I think, then show up on their doorstep with their patent portfolio and start demanding a piece of that action.
They have every right to. You have certain companies that early on in the development of autonomous trucking technology invested millions upon millions in lawyers and IP. Aurora's one of them. They have 1,450 patents related to autonomy, and we saw that they recently raised $820 million in fresh new capital, with T. Rowe Price being the largest investor in that. When I want to mention they did dilute shareholders, so that's important to point out there. Could that patent portfolio be one of the reasons why? Because they use it as collateral potentially to raise that capital? Are we seeing value, in your opinion, being assigned today from a capital raise perspective?
Absolutely. The companies that focused on developing IP formally with patents are at a distinct advantage. And we're seeing that. In fact, we saw that with sort of the demise of some of the other companies, of Embark, for example. They did not have a large patent portfolio, and that put them at a distinct disadvantage against those that did. So yes, I'm confident that the formal IP developed by Aurora gave them a huge advantage when they went to raise money. And without that, they probably would not have been able to raise.
Prior to Embark de-SPACing and going the public market route, they had no publicly available patents, and part of that process, I believe it was one or two, I'd have to check the SEC filings, but very limited to no patents. Why do you think, and you have this experience, certain companies make, and you also go back into server world, why do certain companies make the decision on one hand, okay, yes, we want to put a big part of our budget to securing IP. To me, it's basically you're getting a get out of jail free card, running into financial trouble because you can get loans against that have been documented in the markets. And on the other hand, you get companies that say, no, 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 we don't need IPs. Where do you think that divergent strategy comes from? Is it just the senior leadership doesn't have the experience like you or other leaders in the field, and they just kind of want to move fast and break things, even though we don't want to break trucks?
Well, getting patents is a distraction. There are two things. One, it's a distraction. And two, it reveals your tech. So you are exposing your tech. And so it's always a trade off. You have to distract your engineers, you have to pay money to lawyers at a time when you are trying to move quickly. So I can understand the temptation to not do that work, but I always think it's the wrong strategy. Startup companies who can do patents in this litigious world should do patents. So I thought it was a mistake early on with a number of these companies that weren't pursuing patents as they move forward. The companies I've been involved with, we always focused on securing our IP, protecting our IP as a key part of protecting your investors. So I think doing patents is the right thing.
The world's most valuable company, Apple, they've got a lot of patents on top of patents. They could build a house out of patents, but that's what allows them to innovate and create new products. I don't even know how to tell you how many patents the iPhone has or the MacBook that we're communicating on. You just have to look at the market saying, okay, Apple, the world's most valuable company, has a whole patent division investing in patents and trademarks to secure their IP. Common sense will tell you, hey, I'm a startup, but Apple's doing this. Yeah, it's a pretty good idea to follow what Apple's doing because with a $3 trillion market cap, it doesn't take a rocket science to figure out they know what they're doing. When it comes to autonomy, both on the vehicle side and the truck side, I give a lot of pause and a lot of concern around senior management and leadership. There's really great technical engineers, technical talent, really great to my friends on policy. You guys do a wonderful job there. But it seems that as the industry matures, for the most part, it's lacking the commercial leadership. I have to give a lot of credit Peter von Schmidt, what he's doing at Torque. I think Mr. von Schmidt, when I met with him last year, he talked about the business model that he wanted to build for Torque is really impressive and how he's going to run it as a business. And Mr. Niles Jagger over at Volvo Autonomous Solutions wants to run it a business. Don Burnett at Kodiak wants to run it as a business. But those individuals seem rare and far in between. Why are so few individuals focused on the business? And you mentioned this earlier around commercialization on day one. They just kind of wanted to build the world's best self-driving kit, but the world's best self-driving kit doesn't necessarily translate into the world's best business.
Well, this is a frequent problem in tech that you start at a time when what you're doing really is research. And so the best leaders at that time are people who are deeply wedded to innovation and developing technology. Those are the ones that get funded early. So Silicon Valley loves to fund bright technologists. That doesn't always equate to strong business acumen. So a healthy company has to have a mix of both. There is a time to bring in the business side. That's usually fairly early, but if it's too early, you can get ahead of yourself. So it is a balance. This is turning out to be a 20-year project. I mean, Waymo started 15 years ago, and the other companies sort of drafted in behind them. And it's still going to be another 5 years before we see the tech commercially at some level of scale. So there is a right time to introduce the business side, but you have to be aware of the business implications of your technology early in order to be able to position it well. And so that's where when I see companies that are trying to do everything, which gets back to the universal virtual driver, it's a driver that can serve cars and trucks and tractors and military vehicles. That's sort of a mark to me that you've not really got a handle on the business side, that you really need to be focusing on how you're going to make money with the tech. And then you can always have an eye to the future that, well, yeah, after we succeed in this space, we're going to move to other spaces. But trying to do that all at once, I think is just too hard a problem to solve, practically speaking.
We saw it from Waymo's, and I believe it's Miss Poor from a cost-cutting perspective, where she said, "No, Mas, we're not doing this anymore." And you do need that leadership early. Perhaps you have a CTO to balance it. You got to give a lot of credit to Dara Kawasaki as his reign as CEO of Uber. They had the first profitable quarter ever. They reported on August 1st. That was a big move for Uber, and he's turning it into a platform, shedding assets and streamlining the business. And I believe that Uber is on the track to really big things. So Waymo's slimming down, they're focusing. Uber's slimming down and focusing. And now here we have Aurora. And Uber owns 23.6% of the outstanding equity. They're the largest shareholder on the balance sheet of Aurora. They're trying to do everything. They want to be Amazon. They want to be the everything store, but they want to be the everything driver. We can drive everything, and that's all in their public filings. Uber's slimming down. Largest shareholder said Waymo's slimming down. Waymo's abandoning the universal driver, but Aurora seems to be the only one doing that. Where does this leave Aurora when Waymo's signaling to the market, universal driver is not going to work?
Well, let me preface by saying I'm good friends with Chris and Sterling, so I don't want to upset them. But they have heard me clearly, speaking to them directly. I believe they need to focus on trucks. I believe the effort to try to do cars and trucks, it's laudable from a science perspective. I think it's a bad business decision. And the best thing I believe Aurora could do is mothball their car side and focus completely on trucks.
I agree with that. And I'm going to highlight some really interesting stuff for you because I believe Aurora has an identity crisis. During Aurora's May 2023 investor presentation, it was overwhelmingly focused on trucking. The market is clearly identifying them as an autonomous trucking company, yet Aurora still believes in the universal driver concept. And I want to highlight something to you. As outlined in their July 21st, 2023 S3 filing with the SEC. A snippet of that filing, and I'm going to quote this word for word here because this is important here. The Aurora driver is designed as a platform to adapt, interoperate amongst a multitude of vehicle types and applications. To date, we have successfully integrated the Aurora driver into numerous different vehicle platforms designed to meet its requirements, from passenger vehicles to light commercial vehicles to Class 8 trucks. By creating a common driver platform for multiple vehicle types and use cases, the capabilities we develop in one market reinforce and strengthen our competitive advantages in other areas. For example, highway driving capabilities developed for trucking will carry over to the highway segments driven by passenger vehicles and ride-hailing applications. We believe that this is the right approach to bring self-driving to the market, and we will enable us to target and transform multiple massive markets, including trucking, passenger mobility, and local goods delivery, end quote. It's an identity crisis. I don't know any other way to say it. You have your investor presentation says one thing, your SEC filing says another. Where are they going?
Well, it's a good question. I don't believe the advantages of trying to do all the above outweigh the disadvantages of the costs you incur in trying to build such a comprehensive stack, plus the very distinct differences in the businesses. Trying to get your business team focused on a business that can actually achieve profitability, it's hard enough in one space. Trying to do it across multiple spaces, which have very different economics, I think becomes nearly impossible. So given that the trucking segment alone can be a many multi-billion dollar business for any of these companies, why would you try to do that and cars at the same time, the robotaxi business, it's quite unclear how the robotaxi business is going to come together because the economics are not even close to what you'd get in trucking. And the motivations aren't even close. So given that perhaps you can leverage lane keeping between trucks and cars, that doesn't seem to be a large enough justification, given all the other stuff that you've piled onto yourself in order to accomplish both markets. I just don't see it.
And there's really no room to run in the robotaxi market. It's dominated by Cruise and Waymo. They're expanding. Cruise is on this massive eastward expansion, 7 cities. Waymo's in 4 cities. And you have Motional, which is backed by the joint venture between Hyundai and Aptiv. They're drafting there in third. Then you have Zoox and May Mobility. So the market is pretty much set for robotaxis. And it's not like Aurora's in 5, 6, 7, 8 cities. If they were, we're having a different conversation. I'm going to put my investor hat on, and I'm that guy that reads the financials. I think Aurora has a really great business if they sell off the car business. So hear me out on this hypothetical. They sell the car business to Toyota. Toyota then merges May Mobility together. So you put the Aurora business with the May Mobility and you run it in the Planet, the Planet division. That becomes really interesting. That allows Aurora to streamline their business. Uber dumps their shares because Waymo and Motion are both running on the Uber platform. That helps Uber shareholders because they are streamlining their business. And then Aurora's got a clear shot to do a long run for autonomous trucks is also decrease their burn rate. But every time I bring it up with somebody in the Aurora camp, I get pushback about the passenger car. There just seems like there's no desire, and I'm saying this as an analyst, there's no desire to remove the car business, to streamline the overall business, because even with the cap raise of $820 million, they're not going to have enough runway to become a sustainable business. If they reduce headcount, they reduce the car, they sell it, they're going to have a confusion and lower it. Raises the question, when does an activist investor go in there and see that there's a patent portfolio and there's an opportunity they streamline their business? Somebody's going to shake that tree.
Yeah. So it's a complex proposition. And I agree with you that they should streamline. And I've said this to them directly, that they should focus on trucks. Then the second part of your question, should they sell their car side to a May Mobility or someone? That becomes hard because they've built an integrated one stack serves multiple purposes. How do you split the baby at that point? So to accomplish that, they may have painted themselves into a corner where they can't sell the car side without selling a lot of the truck side with it, unless they get very creative with their licensing of the IP that says you can use this only for cars and you can't share it. So I don't know how they would sell off the car side or whether they would even want to. I think what they'd have to do is sort of the mirror of what Waymo did. They mothball it and say, well, we're just not going to work in that space. We're going to focus on trucks. And because we understand both, we have a great opportunity in the future to leverage the tech into cars. But we're not going to do that now. We're not going to invest money in that now. That's the approach I would take. Mothball it, record as much as you can, remember what you learned, but focus on trucks. Get the trucks out the door, get a business going, let the revenue from the truck side drive your future product strategy so that you don't have to keep going back to investors for 100% of the investment.
Because investors are only going to take being diluted so much and so often. Split the baby. That's another downside to the universal driver. So you create this one platform to go across. You're limiting your economic and strategic opportunities. And I look at this from a layman's perspective. I don't have a CDL. I look at this, okay, I study this. How do you get a truck thing? Just out of curiosity. The braking's different, the steering's different, the acceleration's different, the turning radius is different. And I went out and I drove a box truck just to kind of learn, to start to experiment of the differences in the blind spots. It's a whole different driving versus driving a passenger vehicle or a big oversized SUV, for that matter of fact. To me, it just doesn't seem like practicality was put into place when companies said, hey, we're going to build a universal driver, because the companies that are surviving today and thriving that are left, common denominator, they didn't build a universal driver.
Right. So I will share without attribution the justification I was given for the universal virtual driver. And that is simply that humans who learn to drive trucks first learn to drive cars, and then they go get their CDL and expand their knowledge. If humans can do that, an autonomous system should be able to do that. I think that's a false argument. The reason is that fundamentally, if you go to CDL school, a large amount of what they do is unlearn things you learned for driving a car. You have to operate a truck differently from a car. There are basic things that are the same. The steering wheel controls your lateral motion. The brake stops you. The throttle moves you forward. Beyond that, everything is different. You don't respond to incidents ahead of you the same way in trucks. In fact, sometimes you're taught with a truck, don't swerve out of the way, just roll over what that thing is ahead of you, because that's going to cause the least damage, the least collateral damage. If you swerve, you're going to roll and dump your cargo and potentially risk many more lives than if you just roll over the thing ahead. You're not taught that with cars. With cars, you're taught to swerve. Trucks are going much faster than cars. So the design of your perception system has to take that into account. It's far more massive. So you have to plan differently. So your perception system has different requirements. Your prediction system has different requirements because vehicles act differently around trucks than they do around other cars. So your ability to predict them depends on what you are. The planner is going to be different. The control system is going to be different. With a large truck, you have to deal with the possibility that you're going to get a 40 or 50 knot gust coming across your trailer. And you have to be able to handle that. You don't think about those things with controlling cars. You never have that kind of wind load that you have to control against. You get some, but you don't get that. So the approach is sufficiently different that you're going to build your systems in a different way. And it's expensive both ways. And then trying to integrate them together and somehow find a commonality that says this is one universal driver that can do it all, I don't see it. Now, I have talked with many engineers who say, well, it's not as hard as you think. But I look at the practical results. I haven't seen a universal virtual driver yet, but I have seen focused drivers come to fruition. We've seen cars that are now self-driving without safety drivers. We've seen trucks that are self-driving without safety drivers. Both have been achieved. The science is done for those specific use cases. Now it's commercialization. But if you're trying to build a universal driver, you're still deep in science. So I think the market is speaking. Get the trucks on the road. There's a business there. It's yours for the taking.
There's a business there, and give you another example here. So you look at Brian Selesky, him and Pete Rander that co-founded Argo. It was shut down for a variety of issues, which we won't get into today, mostly politics. And then word on the street is Brian's abandoned cars, and now he's working on an autonomous trucking startup backed by SoftBank. That's word on the street to the tune of $100 million. They're a sole investor. There's two interesting things there to point out for me. One, SoftBank's back in autonomous trucking. You and I both know from our investor circles that SoftBank has kicked the tires on several autonomous trucking companies pre the SPAC bubble.
Long interest in this. Yeah.
That's interesting. And then the fact that Brian has abandoned cars and gone into trucks is interesting. To me, that's another tell sign that the market, that he couldn't necessarily see a path for profitability with robotaxis, and or that the market's already been set with Cruise and Waymo dominating it. Selesky's coming in hot and heavy, very young, in a market that, as you and I both agree on, is starting to commercialize. What is their path to success for Selesky's new startup in autonomous trucking? And on the backside of that, Waabi's been around, 18 months now? Mm-hmm. Where are they going to go as this industry starts to mature?
Yeah. So in the end, you have to have a path to commercialization. So at this stage of the market, as I said, I believe with trucking, the science has been completed and now it's engineering and commercialization. So the path to commercialization has to involve manufacturing trucks. So you either need a relationship with an OEM partner or you need to build your own trucks. But doing that is itself a huge challenge. That's a very mature business. The buyers of trucks assume that not only are you providing highly reliable vehicles, but you have a nationwide service network that can support the trucks wherever they are. So you have to build both of those to be a viable truck supplier. The alternative is to build a business where you are the freight company and you're not selling trucks, you're building trucks for yourself. That's a viable approach. It's the approach I believe Waymo was pursuing in trucking. They were going to build trucks for themselves and run the business as a freight company. The challenge with that is it's very asset heavy. You not only have to build trucks for yourself, you also have to buy a bunch of real estate and you have to build relationships with folks who are shipping goods. So it's a very hard business to get into. So from a business perspective, since there's already a mature industry out there of freight companies, it makes most sense to form a relationship with the truck OEM, apply your technology, which is your sweet spot expertise, apply your technology to those trucks, and have the OEM sell those trucks to the fleets. Everyone wins in that model. So I would say the new Argo, whatever it's called, needs to form a relationship with the truck OEM. And anyone else who's trying to get into trucking, they need to have a relationship with an OEM. That is a production relationship. And doing that is expensive. Having a development relationship is largely meaningless. OEMs love to do development relationships because you'll buy trucks. They don't have to put a lot of skin in the game, but they get a lot of learnings from it. And perhaps it opens a door for them for the future. Doing a production relationship is a very different animal. As the technology company, you're probably going to have to invest into that. So you may have to pour 50 million or more, maybe 100 million into the OEM to get the product built, because you have to help them manage their risk in that regard. And building a new truck is a multi-year program that involves a factory line, lots of training, lots of manufacturing engineering. And they need to know that the risk of doing that's going to be mitigated somehow.
The OEMs have to manage their risk. So you have the big ones. You have PACCAR, you have Volvo, you have Navistar, and you have Daimler. And so here you go. Let's just call, I'm not going to name names here. Let's say we have Acme Autonomy Company or Acme Autonomous Trucking Company, and they want to do a deal with one of the big four. And then the OEM says, okay, great. We understand Chuck Price is right. We have to get a production relationship, but we're going to want 50 to 100 million. Me putting on my Wall Street economic hat, where's the money coming from?
Yeah, that's tough. That's tough. It's like the old song, you have to bring lawyers, guns, and money if you want to make this work. And
the great Warren Zevon.
Yeah. So, yeah, it's tough. I believe the money comes when investors are convinced that your tech is past the science project stage, can be commercialized, and you have a willing OEM. Then I could see an investor investing into that, but they're investing into a 3 to 5 year minimum program. And a lot of the folks who can produce $100 million plus are the same folks who are wanting returns in 3 to 5 years. So it's tough. It's very tough. So I would say at this stage, if you're just starting out and you don't already have this relationship set up, it's going to be tough. So the folks with huge advantages now are, well, it used to be Waymo because they had infinite cash and they had a relationship with Daimler. Wasn't the relationship I would have, I mean, Daimler's great, but the way they structured it, I think, meant that they had to be asset heavy as a business. And I'm not a fan of asset heavy technology companies. Aurora has a great advantage. Torque has a great advantage. Those are the companies that have the deals today. And so anyone else in the business has to either develop with the knowledge of or invest, if you're an investor, with the knowledge that you're investing against a couple of heavy hitters that are well invested, but have strong OEM relationships.
Do we get to a point where, say, a Volvo, a PACCAR, a Navistar follows Daimler's and buys an autonomous trucking startup and operates it very similar to the way that Daimler's operating Torque as a wholly owned subsidiary to really accelerate this? Now you've got the production relationship. You've got the most important thing from your aspect. You've got engineering support from the mothership. You're going to get access to everything that other people necessarily couldn't get access to. Does that become where this is going to go? And then everybody's going to pick a horse and then they're going to roll it out to the market?
Well, it's an interesting question. And this gets into the risk management that OEMs have to consider. If you're selling a truck that has Acme companies, I'm going to name a particular one, but you're selling a truck that has Acme companies' technology in it as the driver. So you are heavily wedded to the success of that company. Do you want that company to be an independent company, or do you want to have your hooks deeply in it? Somehow the OEM has to have their hooks in it. There have to be protections. Otherwise, the technology company essentially ends up owning the OEM. So from the OEM's perspective, that's their fear, is that they get essentially taken over by the tech company. So they have to either say, we're going to buy it, or we're going to invest sufficiently heavy that we've got board seats and some level of control, some level of protection. So they have to do something. So I would not be surprised to see a company like PACCAR or one of the others make a move eventually in that way. But I don't think they're going to do it until they're confident that the technology is going to be successful. So I see a company like PACCAR playing a waiting game. They can afford it. They're one of the large OEMs. They have the trust of their customers. They don't have to be first, but they know they have to be very good at whatever it is that they sell to retain the trust of their customers. But they have deep pockets, and I think they could make a move at some point. I think right now they're watching. They are participating with Aurora now deeply, but they have not made that massive investment that they'll need to make to have their risks protected with a commercial product. And I think that's in their future. And it may be with Aurora, it may be with someone else. They also have their hooks in Kodiak to a much lesser degree than they have with Aurora. Now, I say hooks in, what I mean is they have a development program with Kodiak. Kodiak is using Kenworth trucks, and they seem to have a happy relationship as I view it from the outside, but they don't have a production relationship. That's a future. But PACCAR, by having these relationships, keeps their hand in the game without excessive risk to their own cash. So from the technology company's perspective, it's frustrating. I can tell you, working firsthand with them, it's very frustrating to work with them but not have them fully engage both financially and manufacturing commitment. But I understand why they're doing that. From their perspective, it's the right move. And so I can see that. They're playing a waiting game. So one of the players has to break through that. Aurora's made good advances. Other companies have made advances. It's unclear who the winner will be to this day. So we'll see. I don't know where PACCAR will end up. Right now, they're playing nicely with Aurora. They're playing nicely with Kodiak. There may be other players in the future. There may be opportunities for those that are earlier in the game.
The markets for autonomous trucks is clearly not set yet, but PACCAR signaling to the public markets that they're a leader in autonomous trucking. I'm not buying the messaging because they don't have their version of Torque, whoever that may be. I'm surprised when Daimler purchased Torque that it didn't set off a domino effect in the market where Volvo went to get their partner, Navistar went to get their partner. I'm really shocked that it didn't set off that domino effect. And I'm looking at the market, and you're looking at what's happening on the robotaxi side. Even though there's no such thing as a universal driver, they're interconnected and they watch each other. Cruise has a parent in GM. Waymo has a parent in Alphabet. Motional has a parent in Hyundai Aptiv. They're both bringing unique skill sets there. That's why I feel in order for the autonomous trucking side to succeed, you have to have that parent. And the most logical parent is a world-class trucking OEM.
Yeah.
Let's say one of the ones that doesn't have their version of Torque, they make a deal and they acquire, say, Acme Autonomy startup. Now do we start to see the domino effect going? It's like, we're going to have no dance partner left. We saw it in autonomous vehicles early on after the Cruise acquisition, because then Argo was with Ford and you go down the line. Do we start to see that start maybe to play out over the next, let's say, 12 to 18 months?
It could. It somewhat depends on what the technology companies do. If a tech company decides it's going to purely be a supplier of tech, effectively a tier one to OEMs and nothing else, then what a PACCAR can do is say, well, I'm just going to wait until the tier one can provide me a turnkey solution. That's the game they've played for 100 years. So I don't know if it will be a domino effect. It might. What I do see, and without revealing, I know all the players and have had conversations, some of which are under non-disclosure, so I won't violate that. But I will say that I have noticed a difference among the OEMs in their level of commitment or skepticism about the market. I think I can say without violating an NDA that Daimler is absolutely all in. They are fully committed, and you can see it in everything they do and say. I think they made their moves because of that. They're confident it's going to come, and they chose a strategy that they think will allow them to achieve a scalable success in a time window that is not overly aggressive. It's achievable. It's a sensible thing. And they already have a lot of money, so they don't have to impress investors as hard as some of the others might. I think PACCAR is a little bit more skeptical, and so they're hedging their bet by playing the slower game. And both may be right. It's just what's good for their business. It's not clear what Volvo will do long term. They're pursuing an interesting strategy, and I don't know how that will evolve. And then Navistar, Traton, they have their own issues right now just with the integration of Navistar and Traton. So we'll see where they go. I think they're going to make some choices that will be interesting. I'll leave it at that. I'm not going to give a deeper opinion on what they might do.
That's fair. Daimler's all in on autonomous trucks. They made it a big part of their 2023 Investor Day. They're out there signaling to the markets. They're out there meeting with analysts saying that this is part of our future. So you're right about that. Chuck, putting this whole conversation together, where's the autonomous trucking market heading over the next 5 years?
So I think we're going to see first commercialization in the next 5 years. I don't think we're going to see it in the next 2 years. Commercialization that is meaningful. We may see some revenue generation early trucks in the next 2 years, but I think that revenue is going to be at high cost. So it's not going to be meaningful. It's going to be demonstrative. It'll be done for learning, not for financial gain. In 5 years, I think we'll see vehicles that are road ready, built by OEMs, scalable. And those in 5 years should be completely driverless, at least in certain areas. Certainly the southern U.S. routes should be seeing driverless trucks in 5 years, absolutely. And I think the major OEMs we mentioned are going to be deeply involved in that. Daimler, certainly. They've announced their plans and their timeframes, and I think they're completely rational. So 5 years, I think we're going to see commercialization. Between now and then, we're going to see further consolidation, and we're going to see some moves that will enable more than Daimler, I believe, to be able to achieve those same results.
When do we achieve profitable revenue? 15 years, 10 years, 20 years? When do we start to achieve profitable revenue?
I think it's within 10 years. I think we'll see revenue in 5 years, at least from one player. How quickly that will turn profitable, I think that can be achieved, certainly achieved within 10 years.
The foundation, as we discussed today, is clearly being laid for autonomous trucking to become, in my opinion, a massive business. It's early days in the investing cycle, but it is an investable business that will only become more an investable business as the market shakes out. And frankly, we know where it's heading. Now you're taking a lot of bets, but once we know the market's set as similar to robotaxis, then you're going to see the big money pour in. Then you're going to see the PE money come in. You're going to see the large institutional investors come in, and that's only going to accelerate this development. And we will hit the profitable revenue, Chuck, I believe, as you said, within 10 years. And we will be operating, say, from Dallas to Houston, for example, as a route, full drive route, multiple times a day with multiple companies. As we look to wrap up this insightful conversation, what would you like the listeners to take away with them today?
The future for autonomy is bright. It's one that needs to be approached with patience. It still will require substantial investment, but it is going to happen. It's no longer a science project. It's engineering and commercialization.
Autonomy is coming. Autonomous trucks are going to start rolling, drive route in the next decade. The future is bright. The future is autonomous. The future is commercializing autonomous trucks. Chuck, thank you so much for coming on the Road to Autonomy today.
Thanks for having me.
If you've enjoyed listening, please kindly rate, review, and subscribe on your favorite podcast platform. Want to get in touch? Follow us on Twitter, Instagram, and YouTube at Road to Autonomy, or email podcast@roadtoautonomy.com. The Road to Autonomy podcast is produced by the Road to Autonomy LLC. The views and opinions expressed in the Road to Autonomy podcast do not necessarily reflect those views of the Road to Autonomy, its subsidiaries, its shareholders, directors, investors, or partners. The content discussed on this podcast is for informational purposes only and should not be taken as legal, investment, tax, or business advice. Nothing is a recommendation that you purchase, sell, or hold any security or other investment, or that you pursue any investment style or strategy. The content of this podcast is presented on an as-is basis with no warranties, express or implied, of any kind. Financial mentions about companies in the Road to Autonomy Index and discussions about the Road to Autonomy Indexes are for informational purposes only and should not be relied upon when making any investment decision. Furthermore, an inclusion of security within the Road to Autonomy Index is not a recommendation by the Road to Autonomy Indices, LLC, to buy, sell, or hold that such security, nor is it considered to be investment advice.